JSE All Share Index up 0.56%, which is about 27,429 points. Gold looking very good at over $1,200. Craig, what's fueling all of this?
Morning, Lerato. I think it's still the big overarching flow of funds out of the US. Those international funds looking for more riskier asset classes to go into. I think gold's benefiting, emerging markets are benefiting, some of the emerging market currencies are benefiting, and that's fueling markets at the moment. I think that's the concern, is that maybe we're creating another little bubble in some of these markets, and then when those flows reverse or stop, we could see the markets coming off a bit.
Now at 1,225, as the graph shows there, many people are really worried, because even the analysts and the most optimistic of them couldn't have imagined that to happen to gold. Now what's fueled it is obviously the IMF gold sales to central banks, but there's concern that if the IMF, in trying to improve on its own liquidity, decides to sell gold on the open market, these prices could spike sharply, and we'll see a much higher gold price, which, if you're invested in gold, is good for you, but it raises a lot of other concerns as well.
Yes, I think that central banks are looking to snap up gold whenever it comes onto the market. Sovereign funds are picking up gold, and I think it just seems to be the flavour of the day at the moment. If I look at some of the stories yesterday, there just seemed to be a whole lot of gold interest stories. We had one of the asset management houses talking gold up to $1,300 an ounce, so we're not that far away from that really. At the moment, they were looking at gold de-hedging that's taking place. Some of the big miners, Barrick, the biggest of them, getting rid of those gold hedges, so more reliant on the spot price of gold. So that's really optimistic, an optimistic view on where gold is going. Anglo Gold Ashanti is doing the same thing. So we saw over 3 million ounces of de-hedging in the last quarter. And other little stories. Gold One yesterday came out, increasing their production over the next few years. DRD Gold selling their Blyvoor mine to Aurora. So there's a lot more interest than we've had, I would think, in the last 5 or so years. Really going back to 20 years ago when we had lots of listed gold mines.
But I mean, that's withstanding the fact that it's difficult to mine gold and getting increasingly more expensive. So even if the price is looking good for the final product, getting it out of the ground is just not making sense in terms of the cost of production.
Yes, I think that's a local story where most of our local gold mines are all deep, and we've seen the fatalities and all the safety issues around deep level mining at the moment, and the costs thereof as well. But I think internationally a lot of the gold mining is also more closer to the surface, open pit mining, that kind of mining, and that's that's a global view.
Okay, the rand. Tracking the euro is very strong. What's going on?
Well, again, dollar weakness, and we've also seen a little bit of yen weakness in the last few days as well. So I think just it's those capital flows again shifting into those commodity producing countries, into emerging markets again, and that's really why the rand's still benefiting.
Okay, let's talk about company reports. Sanlam had a trading update. Headline earnings per share rose 5 times in the 10 months to October. Core earnings, though, did drop. What do you think of Sanlam and what's going on there?
Yes, this was their 10-month update. They did come out with their 6-month numbers as companies normally do, and then they just gave us an update. I think the key thing, the top line there, was that conditions are still quite tough, as tough as they were in the previous 6 months that they reported on. That was the big takeaway. I think their new business volumes were up 2%, so that tells a story. And then, there's all these different measures of headline earnings. You can get totally confused about earnings and headline earnings. They came out with core headline earnings per share. That was down 1%. But then, as you say, their normalized headline earnings per share, which takes into account of the investment returns, which is a result of what the markets have done, that was up quite substantially.
Okay, and business volumes down 43%, both in South Africa and the UK. The UK element of it, how important is it for Sanlam?
It's important, but still most of their business is local, but it's not completely meaningless, so it does contribute to the bottom line.
Okay, vehicle sales out. We've got a few discrepancies from the various organizations, the Motor Finance Corporation, the National Automobile Manufacturers Association, but generally we are seeing that the South African vehicle sales market for 2009 is 50% less than what it was 2006, 2007.
Again, it's like headline earnings per share. There's so many different measures when you include associated motor holdings on top of the NAMSA numbers, and then you can throw in this vehicle manufacturer and so on. But I think you need to look at the overall trend and see where that's going. Generally, it's been improving over the last couple of months, 3 or 4 months. So that's been a positive sign. The NAMSA number that came out yesterday, and even the AMH number on top of that, did look a lot better than the previous month. But I think now we're getting into that time where we're comparing ourselves to November last year, which was really shocking. You know, that's when the fallout really started.
Yeah, the year-on-year sales decline is 27.1%. That's something to consider, and new registrations down 6.7%. And it seems that the biggest drop is in light commercial vehicles. So people are reticent to buy cars, obviously, because they don't want to deal with the debt financing of those cars. But it seems that the cars that you use in the industrial process are the ones not being bought.
Yes, I think that in that space, even the medium commercials and the heavy commercial vehicles, also big declines there. And that talks to the investment that's been going on in the economy, or the lack thereof, or the dramatic slowdown in investment that's been going on. So we've seen, you know, passenger car sales ticking over, lower than before, but certainly this dramatic drop-off in investment has reduced the demand for those vehicles.
Okay, now this week we've also heard a lot about property. FNB along with Standard Bank readjusted their property indexes or indices for 2010, 2% growth or improvement for 2010. Deutsche Bank's now also come up and said that if you'd invested in property over the last 10 years as an asset class, despite what's happened in the interim, it's probably the best place to have put your money as an investor, because you would have gotten returns of about 22.8% versus investing in resources, which would have given you 20.8%. And if you move into other sectors like financials, you're not even talking any kind of major returns.
I think if you look at the listed property stocks, they have had a good decade or so. And I think the point about those stocks is there's a limited supply. And when we talk about listed property stocks, the underlying properties there are office space, rental space, retail space, rather than residential. And all of these banks' barometers are more residential space. But if we look at the listed property stocks, they have done well because you've also been getting your annual distributions out of those the rental income of those underlying properties, and that's steadily increased and grown quite nicely over time. So that's given you an income, an interest income. And then the underlying property values have also gone up, you know, over a 10-year view when you're looking at a 10-year view.
But looking at the sharp declines and also the deflation in property prices over the last year has raised many concerns for the individual as to, do I continue to invest in property? Because we're looking at a 10-year trend in property. So even if there was a slump in general over 10 years, it's been a great asset class. But going forward, despite this modest growth of about 2% improvement going forward, is property still the thing to be investing in?
I think if you look at all the great billionaires around, a lot of them have made their money out of property, and it is always a good long-term investment. It goes through cycles just like any other asset class, and at the moment, you know, we're at the bottom of the cycle, I would think, in terms of residential property, and that's why we're seeing the slow pickup now in those indices.
Okay, and then a final question. British American Tobacco is reported to be considering taking the South African government to court over a clause within the Tobacco Products Control Act that says that they cannot do one-on-one selling. So they accept that mainstream advertising on television, on billboards and the highways, that's fine. But you cannot stop them from talking to you as an individual, as an adult.
Yes, I think the concerns there from the regulator's point of view is that they're going to target young people and get all these young people together, have parties and pretend it's a cool thing to smoke, and you should buy these products. I think that's the kind of thing that the regulator wants to stop. But I think it's a good thing that we test the legislation, make sure that it's, you know, in terms of the Constitution, you know, it's all above board. But let's see what happens. It is our biggest stock on the market.
Exactly.